Good morning, everyone. Hello and welcome to the Saturday session of the Parkland Institute Conference, which is called Building the Economy We Want with Angella MacEwen. My name is Lindsay McLaren. I am a Parkland Institute board member and also a professor at the University of Calgary. And I'm very excited to introduce Angella and facilitate this session. So as some of you may know, back in June, the Parkland Institute hosted a virtual conference on the theme of a well-being economy, or in other words, an economy that works for all people and the planet rather than the other way around. And we had actually hoped to have Angella at that conference, but unfortunately the scheduling didn't quite work out, so really excited to have her here today and in person as a bonus. So it's my pleasure to introduce Angella MacEwen, who is a senior economist at CUPE National, a research associate with the Canadian Centre for Policy Alternatives, and a policy fellow with the Broadbent Institute, and she's worked as a labor economist in Ottawa since 2012. She sits on the board of Canadians for Tax Fairness, is co-chair of the Trade Justice Network, and is active with the Green Economy Network. She follows a wide range of economic issues that impact workers, such as understanding precarity and inequality in the Canadian labor market, evaluating the impact of international trade and investment treaties, and investigating the role of fiscal policy and tax policy on income distribution and wealth inequality. Angella writes a quarterly newsletter for CUPE with economic analysis from a worker's perspective called Economy at Work. She provides expert advice to governments, both as a member of advisory panels and through parliamentary committees. Most recently, Angella is co-author of a book on wealth inequality and tax policy in Canada called Share the Wealth: How We Can Tax Canada's Super Rich and Create a Better Country for Everyone. Angella was born and raised in Treaty 6 territory in rural Saskatchewan, and she received her MA degree in economics from Dalhousie University. So please join me in welcoming Angella MacEwen.
So glad to be here. I was sorry to miss the June session. This whole idea of social determinants of health is really what brought me into economics, because it was something I believed in my core to be true, but economists kept telling us that we couldn't do it, that it didn't make sense, and so I wanted to be able to push back on that nonsense. So I studied economics. And now what I do is I try to push back on that nonsense. So my goal today is to maybe give you more confidence in your own intuition and your own beliefs and push back against this nonsense that we hear from economists kind of on a regular basis. Because where has their advice gotten us, if we really think about it? What's the state of the economy globally right now? We have war in multiple countries. We have climate change that we have made promises and promises to address that we are not addressing. And the poorest who have not caused that, who have not contributed to that, are bearing the highest cost of climate change. And we still have economic uncertainty from the pandemic. So we still have a whole bunch of implications from the pandemic that haven't played out, including, as Abby mentioned last night, profiteering by drug companies who didn't allow us to share that resource. With the Trade Justice Network and with CUPE, we campaigned pretty hard to try to open up that justice. We even had a clause in a trade agreement that would allow us to do it, but Canada was front among countries that were not allowing us to make that happen. We have rising prices. Again, it's basic necessities. The cost of food, the cost of housing, the cost of energy are rising. Those who provide those services, energy companies, grocery stores, are profiteering off of it. We have the central bank who ignores that profiteering. Now they're acknowledging it. We've pushed them that far. But they're raising interest rates to make housing even more expensive. They're doing quantitative easing. They're making life harder and trying to push the economy into a recession, which reduces workers' bargaining rights. Unemployment is still high. We look at that unemployment numbers, we want to take into context. We have an aging population, we have people that have dropped out of the labor market altogether, and we have a lot of precarity. So we have a lot of people stringing together multiple types of jobs. And we have changes that are coming into place. We call it AI, but it's not AI yet. But we have technological advancements in ChatGPT and others that are actually coming at white-collar jobs now in a way that technological change hasn't yet. Technological change, climate action are all going to affect our job market in the future. So we have this big transition. We're in this moment of transition, and the current economic paradigm has not been able to address it. My grandfather, when I was little, did a lot of Toastmasters. And so when I was preparing this, I heard him in my head. He would say, tell them what you're going to say it, and then tell them what you said. So I felt like I had to put this slide in here to honor my grandfather. So I'm going to talk about what the current paradigm is, how it was arrived at, where it has gotten us, specifically here in Canada, and then what theory and evidence can we use to build a different paradigm, to push back against that paradigm, to undermine that paradigm, and to build a better economy for all of us. So when we think about what is an economy, often I talk to workers a lot. I do a lot of political economic education with frontline workers. And their initial thought, it's the bank, the returns from the banks, the stock market numbers, GDP growth. But that's not an economy is. An economy is actually, it's the combination of all of our collective work, whether it's paid or unpaid, that we do to produce the things that we need to live, whether that is household production, where we are raising children, we are feeding workers, we are taking care of our elders, we are repairing our house. That is part of the economy. Production for profit, which is a unique aspect of a capitalist economy, where you go to the office or you go to the factory. That is part of the economy. How we distribute what we've produced. So whether that's through wages or government redistributing benefits. And then what we consume. That's sort of how we decide what we need. There's the natural resources that we consume, public services that we consume, and then the goods and services that are provided by the market. So the economy includes all of these decisions about what we will produce and how we will produce it and how it will be distributed. And social norms shape all of these economic decisions, as does our technology and the machinery that we have. Our financial system is technology. We have various types of economies around the world today. This is the other thing that when I talk to people about the economy, they think there's one type of economy. This is what, the right wing has sort of been conditioning us to think for a long, long time, is that there is a economy, there is one right economy that will meet our needs, and that's not true. There are actually multiple types and variations, even of capitalist economies that exist around the world today. And a capitalist economy is marked by the private ownership of the means of production. So we privately own factories, we privately own Facebook. That's a key factor of a capitalist economy, but there's variations on that. And then the other key factor is that most of us have to sell our labor for a wage. We have to, in order to survive, we have to get somebody to pay us money. When we do that, we create wealth. It's workers that create wealth. It's the work that we do, whether it's paid or unpaid, whether it's for the private sector or the public sector. It's that worth that creates the economic value that we have in a society. But in a capitalist economy, the surplus goes to the private owners of the means of production for the most part, and some of it is distributed according to the law. We have minimum wages, so those capitalist owners are supposed to have to pay us a certain amount of money. There's laws around labor rights that protect our rights. There's regulations governing production, trade, property rights. And so we have a legal system that is supposed to protect our rights, but we have a political system where the political elite, the political apparatus is captured by the people who have the power, the people who own the means of production. Because of how we have this structure, the economic rules that we make, like labor laws and employment standards, like to what extent and how do we protect private property, like the regulation of banks and financial exchanges, all of these seemingly technical rules have a really important role in determining the shape of our economy, what our experience is like. And you hear in the news economists talking about the economy as if it operates to fixed laws of gravity. But that's not true. All of this is socially constructed. And all of it is always changing, both the technology and the norms that shape them, but also the laws. There's an economist, Clara Mattei, who has a book called The Capital Order: How Economists Invented Austerity and Paved the Way to Fascism. And so she makes the case that normally we think about this austerity, we think about this neoliberal order coming with Ronald Reagan in the 1980s. She argues it was much earlier than that. It was actually the 1920s, following the First World War, where the capitalist order saw socialist organizing as a real threat to this current system. People were imagining possibilities that were very different than what we have today. And they paired with technocrats to come up with a neutral economic theory that would have embedded in it principles that prioritized capitalism, that prioritized the capitalist class. And so she calls it the austerity trinity: fiscal, monetary, and industrial austerity, where industrial austerity is anything that weakens labor unions and ensures wage flexibility. And so those policies, that technical analysis that we see economists like Jack Mintz put forward so often, is inseparable from what we now call neoliberal economics. And a Marxist thinker, Ellen Merskens-Wood, describes how capitalism evacuates social content. And so that's how they were able to make their analysis of the economy seem unbiased. They ignored everything social. In order to get the answers that they wanted, they discounted natural resources. They discounted the need for biodiversity. They discounted the value of unpaid work. They discounted power and social relationships. And when you do that, you get neoliberalism. And so supply side or trickle-down economics, as it became popularized in the 80s, is what we get. So what they came to was, they're like, okay, so we're going to assume that total economic output is restricted by the supply of labor, capital, or natural resources. What that does is it says whenever the public sector uses any of these things, it's going to be inefficient. The private sector has to have first access to all of these things because they, in the pursuit of profit, will make the best decisions about how things should be allocated. And Armin Yalnizyan, very popular Canadian economist that I am proud to work with often, likes to say trickle down would work if it weren't for all the sponges at the top. That's why fiscal, monetary, industrial austerity can appear to be technical and neutral, because it intentionally ignores the sponges. If you were trying to develop policies that would undermine building the type of economic system that we want to build, it's that austerity trinity described by Clara Mattei. And if you think about the elements that the current moment has in common with the 1970s, there were companies profiteering, there was the central bank increasing interest rates to drive the economy into a recession, to undermine worker power, governments pulling back on their spending. All of this has the effect of bullying the majority of us into accepting our fate, to make us accept lower wages, to make us accept higher costs for housing, to make us limit our imaginations. Or it could be a moment where we wake up and see how the system is working and seize our power. Somebody asked me yesterday whether I tend to be more optimistic or more pessimistic, and I said I jump back and forth. So that's an example of jumping back and forth. The moment either could be devastating or it could be a huge, huge opportunity. And if we look at what has happened in Canada over the past 75 years or so, we can see how we've fought forward for policies that recognize our vision, and then how we've lost some of those. And so I want to acknowledge that anti-worker austerity policies were alive and kicking well before, Ronald Reagan and Brian Mulroney entered the stage, and that some of these policies we built in the context of a compromise between the capitalist vision and the socialist one. So I'm not saying that these are perfect. I'm not saying that all we need to do is go back there, but I am saying that we can learn what works, we can learn some of the principles that are effective, and we can recognize what we still have that we want to make sure we hold on to. Because under the guise of modernizing our economy, there's been a slow and steady march getting rid of Canada's more social democratic institutions that we had fought so hard for. We have this drive to dismantle economic democracy. So Saskatchewan, I think Tommy Douglas in his first 2 terms brought forward something like 50 crown corporations. There was Sask Power, Sask Oil, Sask, and everything Sask, of course. Like that's how we name things. And very slowly, whenever Conservatives were in power, they undermined those. They either restricted the power of those crown corporations or they privatized them completely. The Wheat Board we had established in 1935. That's an economic democratic institution that farmers fought for. They had like a newspaper, the Western Producer. The whole point of that was propaganda to help us build the Wheat Board. So we established that, we fought for it, we had it in 1935, and it was sold off, privatized to the Saudi government in 2015. And what that did is instead of farmers being collective together, they became individual actors, and the ones who were able to take advantage of certain markets, who were big enough to get the best contracts for themselves, to ship their grain, the best, those won out, and smaller farmers, smaller communities lost out. So that's that loss of that understanding that we're all better off when we work together. We had public telecoms. Alberta Government Telephones was made into a crown corporation in 1958. It was privatized into what is now TELUS in 1990. In fact, SaskTel is the only telecom left, public telecom left in Canada. And this was a result of federal government regulation. The federal government really wanted this to happen and pushed the provinces to do it, but it was so popular in Saskatchewan, it was so important to the fabric of keeping in touch that Saskatchewan has to this point been able to keep it. We have public energy companies that provided that foundation, that infrastructure for all of us to be able to do whatever it was we wanted in an affordable way, where they could shift and make decisions. If we wanted to move from one type of energy production to another, a public company is, the best way to do that. But those have been privatized by several provinces. Alberta was actually the first one to do that in the late 90s. Ontario has a mixed bag of partly privatized, partly public, but all of the new stuff they're putting into the public sector. So there's this strategy of wherever they can undermining economic democracy. There's a strategy of shrinking the government. So cut taxes, underfund public services. Then when the public services aren't working, introduce a private option. So we're seeing that happen in healthcare now across Canada, where there's private surgical services. We're seeing private long-term care growing, even though there were devastating evidence from it throughout the pandemic. We're seeing it in education. So this strategy is everywhere of cutting the resources of the government, underfunding the services that we need, and suggesting that the private sector would be able to do it more efficiently. Together, we created unemployment insurance in 1935, and that was the result of workers rising up. There were workers in BC that were in unemployment camps that rode the rails to Regina. They got stopped in Regina. There was the Regina riot. It was bloody. The RCMP came in, and eventually, as a result of that struggle, the federal government brought in unemployment insurance. Even though it was technically provincial jurisdiction, it was deemed important enough to be held at the national level. But what we've seen happen there is in the 90s, the federal Liberal government took the surplus from it. There's like $57 billion in the EI fund that they're like, we could use that money somewhere else. And then they cut access to it, and they have not updated it for the reality of the current labor market. It sits there, which saw during the pandemic, as a not incredibly useful tool for the current moment, for the current labor market. So we have this peace that we fought for, that we built for workers' rights, that we used to help workers get retrained. I used EI in 1996. I was laid off. I was on unemployment insurance, and I was able to get paid EI for 9 months while I went back to school and got a certificate to be a computer help desk person, which was an awful job, and I moved on. But, it got me started on this path. So this is an incredibly useful tool that we could be using right now in the climate crisis to retrain workers, that we could be using right now for workers that are working in jobs where they don't have a grade 12 education, and now all of a sudden there's more digital requirements and they don't know how to use those things. So we could have digital literacy training for workers so that they can keep their jobs. But we're not doing that. The other piece of the strategy is deregulation. So we remove regulations or we underfund enforcement. We lock in deregulation with trade deals. A lot of our trade deals have what's called ratchet clauses, so standstill and ratchet. So we say, okay, the level of privatization that we have right now in the economy, we're going to consider the norm. If any provincial government privatizes further, that now becomes the norm. It becomes much more difficult to undo that privatization. We use neutral central bank policy. So you've heard the central bank complain about wages. They've mentioned profiteering, but they're like, there's nothing we can do about it, which is true. The federal government can do something about it. And so they've talked about, employers shouldn't increase wages. That we need to get inflation in check, which really means we need to get worker power in check. So we have all of these tools that have been used very successfully to undo the institutions that we've built. What has that gotten us here in Canada? This slide is about shrinking the size of government. And when I talk to people, they're always surprised so what this shows is tax revenue as a share of GDP. And on the top line, the blue line, is provincial tax revenue, which has actually since the 90s remained reasonably stable as a share of GDP. They've changed the tax mix, so provincial governments have lowered taxes on the rich and increased taxes on the middle class. But in terms of the resources available to them, they've kept it fairly stable. It's the federal government that has shrunk the size of government. The big shrinking in the size of government happened in the early 1970s with rules around inheritance taxes. So there was a dramatic shift in the 70s. It's less dramatic here, but there was first a Liberal government and then Stephen Harper that reduced federal government revenue by 4 percentage points of GDP. So we have a $2.5 trillion economy. So 4 percentage points is $100 billion. What could we buy with $100 billion? And I argue that we could buy things that make the economy more stable, that make the economy grow better, that make us more resilient to crises. So not only would we have the things that we want, we would have the things that we need for a stable economy. And so what's happened at the provincial level is that the federal government has cut transfers and then argued that provinces have the jurisdiction over health and they have the jurisdiction over education, and so it's their responsibility. So they've kind of stepped back. And Alberta and Quebec are really leading that charge. That's what those provinces want. For different reasons, but definitely that's getting us into a situation where we have less federal government leadership. We have seen union density fall in Canada, especially in the private sector. So the blue line there is private sector density, and it's on the right side. So we're now about 14% of the private sector is unionized. And most of the economy, most workers, work in the private sector. It's about 75% of workers. The public sector has kind of done some heavy lifting to keep the overall union density reasonably stable, but we're still seeing now fracturing there because we're seeing in healthcare, we're seeing increasing use of temp agency workers, temporary foreign workers under temporary permits, and workers that are more difficult or impossible to unionize, to bring in, that are more precarious to get that wage flexibility that we're wanting. So this is what we've seen. There's several policies under this industrial austerity that have gotten us there. And we were never really even comparable to like European nations in terms of what our union density was. We're better than the States, which is something we say a lot, but that's still not very good. This is from the book. Canada's top 1% is getting wealthier. I was actually shocked at how much money some Canadians have. There's research from Credit Suisse that shows, that does some forensic digging into how much money the wealthy actually hold, because they don't like to tell the federal government how much money they have. We have a very small insular network. In the book, I go into it a little bit about the connections that the 1% in Canada have. They put each other on each other's boards. There's the Southern family here in Alberta that, the dad had a company and the daughters are on a bunch of boards and got different companies themselves. There's Onyx that Abby mentioned last night, that very, very insular, very, very wealthy, very influential. 87 families in Canada had a net wealth of $259 billion in 2016, and that's equal to the wealth of the 12 million poorest Canadians. So the bottom third of Canada has the same wealth as these families. Of the 20 wealthiest families, this shows this network effect, these interrelationships. 9 of those had family members that were on the list of the CCPA's highest paid CEOs. So these very wealthy families get CEO appointments. CEOs are now, thanks to the United States, that influence, are paid very, very well in Canada. And then because we don't have very good financial transparency legislation, it makes it very difficult to track wealth and tax avoidance. And this is one piece actually that the federal liberal government has been moving on, slowly to my liking, but Canadians for Tax Fairness have been very effective, I think, in pushing for this, and we've worked internationally as well to get some cooperation. Top incomes are increasing as well. Often when I talk to people about income and wealth inequality, we have in our head they're the same people. They're not always the same people. But the data came out last week for 2021, and there was a huge spike. So for the top 0.01%, their average income in 2021 was $12,542,000. So that is the average income. This is a group of 3,000 people, and this is from tax filings. Only about 30% of that comes from salaries, but still that's a lot to come from salaries. The rest of it comes from returns to capital. This 0.01% group, they're 80% male. Their median age is 59. Most of them are married, but it's a very small group, and they're very influential. Their success is very closely tied to their ability to influence governments. The 1% group, feel bad for them, they only made $800,000 last year on average. So they're feeling there's this tendency for that group to really feel like they're falling behind because they see the people next, they interact with the people who are making millions of dollars, and they're feeling like 800,000 just isn't enough to get by. How many yachts can you even afford on that salary? Not that many. So this group is slightly less male. It's 70% male. If you read the StatsCan release, they're like, women have been steadily improving their share. It's like, it's pretty freaking great glacial, if you ask me. And there's no data on racialized groups. There's no data on indigeneity. There's no data on immigration. They don't even have that. But you can be sure that there's discrimination at play here, right? Like, we know. And this slide is just to show that this effect is largely being driven by capital gains. And right now in Canada, only half of capital gains are included in your income for tax. Half of that's tax-free for those poor 12 millionaires. We've seen corporate profiteering. So this is normally in Canada, it's the banks that do really, really well. We saw for a brief period of time when inflation was surging. The brown line there is non-financial companies. So that's Sobeys, Loblaw, all of those guys. During that period of time, they were able to keep workers' wages down. They were able to slightly increase prices. They kept that money. This has been really effective, having this evidence to point it out. In terms of a public narrative, it's been less effective in getting anybody to do anything about it. The NDP has picked up on this, is pushing on it. The Liberals have brought, the grocery store giants to the House of Commons to sort of wag their fingers at them. Galen Weston has left his post, but I'm sure he's going to be well compensated elsewhere in a slightly quieter position. He learned his lesson that maybe you don't steal people's money and appear on TV in a sweater vest, and that's not likable. We've got this thing that the non-financial profit has, maybe that time is over, but financial corps, it's going to be their time now. You're going to see them trying to make a lot of money off of extending people's mortgages. So what's happening now is they've moved amortization periods from 25 years out to 75. Some people have infinite amortization periods, which just means in 2 to 3 years, when they have to renegotiate their mortgage, there's no way that they're going to be able to meet the stress test to do that. And our current system, the law is such that if you don't meet the stress test, you have to stay with your current bank. You can't maybe get a cheaper option somewhere else. So we've kind of made this weird incentive there for banks, where they know that they're going to be able to hang on to people and bleed them dry slowly, while they're not actually making any payments on the equity of the house. And in Canada, we often think of oligopolies. We have, 3 oil companies in a trench coat. We have 3 banks in a trench coat. We have 3 grocery stores in a trench coat. We have a lot of oligopolies. And this is because competition law in Canada is structured to prioritize efficiency over what normally neoliberal economists would argue for in terms of market efficiency. We say, you know what, we're competing with the United States. We need to let you be bigger so that you can do that. We're going to go with bigger banks. So we get a lot of oligopolies, and we get a lot of higher prices here than you would get under a different system. But the Broadband Institute has a really great paper out talking about analyzing the grocery stores' returns and the decisions that they're making. And what they found out is that it's actually investors that are driving these capitalists' decisions now. It's BlackRock, it's Vanguard, it's all of those companies have huge investments in the grocery stores. The CEOs need to make those investors happy. You need certain numbers for the quarterly report. And so it's these investors behind the scenes that are driving decisions. We're seeing in Canada, a huge number of dental offices are slowly being quietly privatized by these investors. You're seeing veterinary clinics privatized, but you don't know because it's the same storefront. So we're seeing that in housing. You've got these financial investors that are investing in, and all they care about is the quarterly profit. What's my return going to be now? And so they don't care about the long-term longevity of that investment. They don't care about the services they're providing. They are literally squeezing as much profit out of it as they can for the moment, because the moment it's not profitable, they can leave and go somewhere else. And CEOs know that, and so they are chasing those investment dollars that return. And so that's a bit of a change in our economic dynamic. Yanis, we mentioned him last night, the Greek finance minister. He has a book out called Techno-Feudalism. That's what he's calling this dynamic, this shift. And he's saying capitalism is dead. I'm not sure that it is, but it's definitely changed. So something that was really sort of enlightening for me was to think about the Bank of Canada, because it is in our current economic system, it's this ultimate neutral technical policymaker. They're like, we're just gonna target inflation, and we're just gonna look at the economy, whether or not we're meeting output. So they decide what our capacity is, like how much could we produce? Are we producing more than we should be or less than we should be? So they're like, we're just gonna look at the data, change the money supply according to that. You can see here that big arrow is where the Bank of Canada started shrinking the money supply. So there's a whole bunch of different measures of money supply. M1 is the most liquid, so your checking accounts, your savings accounts. M1 and M2 start to get into GICs or mutual funds. So there's different numbers. So M2, which is the broadest, is not shrinking yet. It's not disinflating, but it's not growing as quickly. And M1 and M1++, they're actually shrinking. So right now, the Bank of Canada is increasing interest rates, it's shrinking the money supply, and it's encouraging governments. The most recent monetary report and their advice to governments was that governments should not increase spending by more than 2%. They're like, the economy next year is going to grow by 2%. You cannot increase your spending by more than 2% or it will be inflationary. Daniel Blakey, who's a great NDP MP from Winnipeg, actually challenged him on this. He said, well, isn't there certain types of spending that's inflationary and certain types that's not? For example, not to steal, I'm gonna lead into what Carolyn's gonna talk about. If the federal government just built housing, that's not inflationary. That's actually disinflationary because we would reduce the cost of housing. There are things that government could increase their spending on that would make life more affordable for us that would actually be disinflationary. So that top line economist standard from Mark Carney, not Mark Carney, sorry, it's the new guy. Macklem, thank you. Macklem, that's the standard economist line, but if you know enough, if you know the theory, you can dig down and say, wait a minute, doesn't your theory actually say? And that's what Daniel Blakey was able to do, but no media picked up on it. It's our job to pick up on it, to push that narrative, and to get some better policy happening. And so this slide is like the outcome of all of those policies. What we have now is a level of household indebtedness that is unprecedented. In the 1990s, the average household owed about 90% of their income. Now it's 186%. And so most of this has been driven by financialization of the housing market, and government policies have made that worse. When you introduce a first-time homebuyer plan, you give some people a little bit more money to drive up the price of the housing in their bargaining. You don't make housing more available to anyone. You've just advantaged a specific group. And so a lot of the government's policy on housing has done that. This has led us to this financialization where we now owe unreasonable, ungodly amounts of money, and interest rates have gone from 0 to 5% within the span of a few months. And so people who lived through where interest rates were at the beginning of this chart, when they were 13%, often don't understand why the younger generation is complaining. They're like, we had interest rates of 20. I remember my parents having interest rates of 20% and my dad saying, the bank owns the house, right? Like, that was real, but this is real too. This is real where if you can't get access, if you can't get a bank to lend you that money in the first place, you are totally priced out of getting on this wheel that then is guaranteed, apparently, to give you a better retirement return than any other investment that you can make. And we have made that retirement return non-taxable. So capital gains on your primary residence, there's no tax on it. You can't invest for retirement in any other savings vehicle except the TFSA, which is small, and have that benefit. So we have prioritized housing as a retirement vehicle at the expense of the current generation, who now cannot buy into that vehicle at all unless their parents happen to be incredibly wealthy. But did this policy create jobs and growth as it was promised to? No. I could just stop there, no. Economists at LSE that did a really detailed analysis. They used Monte Carlo simulations. They took over 50 years, 18 rich countries, and they combined 7 variables to come up with a tax the rich indicator. So the top personal statutory rate, the effective tax rate for the top 1% of wage earners, the top tax rate on dividend income, the corporate income tax rate, the effective tax rate on capital, the top inheritance tax rate, and government revenue from taxes on assets. And so they combined these into one sort of variable, and they ran this Monte Carlo situation. What you see here is that on average, we've substantially declined our taxes on the rich. All of these OECD countries together have taxed the rich less. This is a small segment of those 18 countries. You can see Canada's big drop there was in the 1970s with the change to inheritance tax rules. I believe that was Pierre Trudeau, but it's fallen even steadily since. So we have fewer resources. But it's not the only option. Even in the current scenario, look at Denmark. Denmark in the 80s actually increased taxes on the rich, and over the whole period has remained fairly stable. So when we think about the model where should we be more like those European northern cold countries, yeah, I mean, we could. That's a possibility. So this report came out. Elizabeth Warren shared it. It was incredibly popular. It was their working paper came out in 2020. Their final paper came out in 2022. So neoliberalism's dead, right? This is it. This is all we needed to do. We proved it was wrong. That just proves that taxes fell. But what they found when they did this was that there was no impact on growth. The only thing that changed was that inequality increased, which is what we thought. Done, nail in the coffin. No, we know that's not how it works. There's a few reasons why. One of them, if we go back to Clara Mattei, when she's talking about the trinity of austerity, she's saying the reason that this has been so sticky is because it doesn't matter if it serves those technical goals. It matters. What its point was to uphold the status quo. It was to preserve the current economic system, and it has done that. And so we have what another economist, John Quiggin, calls zombie economics. These zombie ideas, they just won't die. And we try to kill them. We thought in 2008, and the financial crisis, we thought for sure that would be it. Nope. Now we're in another moment where with the pandemic, we're like, no, this has to be it, right? John Quiggin thinks that we need another model. We need another cohesive vision. I think we already have that vision. I think we can package it in any number of ways that we want. And then as Abby said last night, we need the political power to implement it. So we need those three things. We need to recognize that the purpose of the current system and the logic behind it was not to grow the economy. It was to preserve the current economic order and to squash workers. We need to package our own cohesive economic theory, and we need to build power around it. If we come back to this simple model of what an economy is, we can see how it's different, or how it could be different from what we have. We do need to produce the things that we need. But as I often say to people who are like, oh, you can't tax the rich, you can't tax corporations. Well, grocery stores can't leave. I mean, Galen Weston can leave, but we're still gonna have grocery stores. We could have cooperatively owned grocery stores. We have the co-op in the prairies. We have a different model, so we don't have to be afraid of and beholden to these capitalists and their investors. We know other models can work. In the East Coast, I talk about the Irvings, right? Like, there's still gonna be gas stations even if they're not owned by the Irvings. We can have cooperatively owned or other types of ownership of gas stations. And so sometimes we are just very afraid of losing what we have. We're not confident that our understanding of the economy is correct, because these economists, let me tell you, can be very intimidating, they can be very cold, they can be very neutral, and they can really shut down a debate. But what we need to do is recognize that all of these economic debates are not technical, they are political. What is a fair share for wages, for profit, for taxes? What is a fair share of the surplus that we create? Who should own it? That's a political debate. It's not a technical one. How would an increase or a decrease in specific shares affect the surplus that our economy creates? You can imagine that it would. There may be different shares that would have us create more or less. Who should pay for and benefit from the economic activity? Should the public sector pay for childcare and replace that unpaid work? What does that mean? What are the social implications of doing that? What are the political implications of doing that? And what are the economic? We know that it pays for itself. We know that it improves the labor force participation of women. We know that it can, if it's high quality childcare, if those jobs are well paid, we know that it can contribute to good jobs and quality outcomes for those kids. We know what the policies are. It's making it happen. It's arguing for it under our economic paradigm instead of remaining stuck in their economic paradigm. So when we think about these questions this way, then it becomes obvious the next question is, who benefits if we do it this way? Who's pushing for this and why? In Ontario, under the Kathleen Wynne government, she undertook this whole labor law reform process, and there was research, and there was presentations, and it was fantastic, and there were some great ideas. And I was arguing to increase minimum wages, that this is good for the economy. When people have more money in their pocket, they spend more money. They can actually meet their needs. They can buy food at the grocery store. They can pay for childcare. They can, maybe get a coffee and yoga. This is what we can do when we have more money in our pockets, when workers have more money in their pockets. And who is arguing against it? Who is saying that minimum wages kill jobs? Well, the Restaurants Association, the CFIB, all people who would have to shell out more money for a minimum wage. And then the banks, they kind of agreed because they're all happier. The Association of CEOs, even though it didn't really affect them, they were arguing against the minimum wage because they knew that it keeps workers hungry. So when we think about these as political debates and then we ask who benefits, that gives us a better answer than that neutral technical economic theory. And so Jim Stanford, in his book, Economics for Everyone, I totally encourage everyone to get a copy and read it. I go back to it all the time. He encourages us to imagine, after he explains the components of an economy and how, kind of what some of the fundamental building blocks are, he invites us to imagine what our economy would look like. What would a better economy look like? This is what I could fit on a slide. Our economy would have economic justice. So economic policy would ensure a more equal distribution of both income and wealth. We would have quality universal services so that nobody's falling through the cracks, so that we're not competing against each other. We're not stuck fighting for scraps for the basics. We all have at least that, and then we can go from there. Full employment is another policy that the left in Canada has pursued. We've encouraged the Bank of Canada to have full employment in their mandate, to understand that it should be the case that everyone who wants to work has a sustainable job with decent wages. We had briefly this year cries of a labor shortage, and they showed, in the Stats Can had how many job vacancies there were. There were 10 job vacancies for every unemployed worker, but what they didn't recognize, wages weren't going up. So those are not true job vacancies. If there's a true labor shortage, employers are going to increase their offer to attract workers. If those wages aren't going up, what you're seeing with those job vacancies is actually a high turnover strategy. They're like, we know this job is crappy. We know people are going to quit. So we are just constantly going to be hiring new people to make sure that we have enough workers to fill the shifts. And they weren't even getting that because the jobs were just so crappy and costs have been going up so much. So they were afraid. And what did they do? They pressured the federal government to increase temporary work permit, to bring in more workers who are more vulnerable. And so what we want to think, I didn't have this in the previous slide also, is does this strengthen worker power or undermine it? Does this make us weaker? Does this create divisions among us? Or does it build solidarity between us? That's a really important piece in thinking about the policies that we want and thinking about our cohesive vision. And then finally, the donut, we have to respect the limits of our natural resources. We have to respect biodiversity and the importance that has to our own health. And we have to respect adaptation needs where it's too late. So this is a tool that I use. I teach political economy for the Canadian Labour College, and this is a tool that I use in that course. And I got it from Armin Yalazan. Armin Yalazan did a wonderful video with the National Film Board where she talks about the Big Reset. So I encourage you. She sort of mentions this offhand, but I thought it was so powerful, so useful as an alternative vision of an economy, that I talk about it all the time. And so instead of thinking about the economy as a pie that we just need to grow bigger, why don't we think about the economy as a cake? And so every layer depends on the health of the layer below it. And this is Hazel Henderson. She's kind of a a kooky eco-economist person. This is old, I think, well, not that, like 60s, 70s. I think it's really, really useful. So if nature isn't working, if we don't have that respect for nature, we all saw with the forest fires, the economy shut down. Like if we aren't managing that, we can't do anything. The cod fishery, if we didn't manage the cod fishery properly, it collapsed. So we have to manage that. What she calls the love economy is household production. If we don't have the love economy working properly, we saw this during the pandemic. If we don't have somebody to take care of our kids while we're at work, we can't work. If we don't have a healthcare system that's properly taking care of our parents, we can't work. My grandmother-in-law was in the hospital in Nova Scotia, and we had to take off work to sit with her to make sure that she ate the food that they brought because she hadn't been eating. She got up from bed, she fainted and broke a hip. Like that created costs for the public economic system that aren't accounted for, and it created costs for us and obviously for her breaking her hip, which is quite painful. We need to make sure that that's respected and taken care of. On top of that, she has the underground economy. On top of that is the public sector. So the public sector, I believe, should provide the tools that we need in an economy, provide the foundation. So what do we need in our economy? We need transportation, public transportation. So that should be publicly owned, publicly provided, publicly paid for. It should be free. Education, publicly provided, free. Childcare, publicly provided, free. These are the pieces that we need. Healthcare, that should be publicly provided. There are actually distortions that happen when we have it privately provided. We see that as being the only, country that has universal health care without universal pharmacare. We see the incentives in having that provided by the market. The costs go up dramatically because the demand for health care is infinite. You will always pay more money for the thing that you need to live if you can, right? If you got money in your pocket, you're paying it to get the MRI. You're not, very many of us avoiding that private option out of principle when your health is at stake. The government is counting on that right now. And so when you have all of those bottom layers in place, the private sector, actually that's when it operates best. That's when it does its job. That's when we can have a prosperous economy. I'm just putting this in. This is the donut. We saw the donut last night. The inside of the donut is our social foundation. The outside is our ecological boundary. And then I just want to think about when we go back to that frame of fiscal, monetary, and industrial policy, what are some of the non-reformist reforms that we're already pursuing or that we could pursue, maybe stronger? We have industrial ones where the federal NDP have got anti-scab labor. The Canadian Labour Congress has pushed for that. So anti-scab is huge. That increases workers' bargaining power. In BC, we got single-step certification for unions. This is pretty technical, but what happens, BC has gone back and forth. When they have like an NDP government, they bring it in, and when the Conservatives come back, they take it out. So that creates a really nice natural experiment where we can see what happens. And what happens when you have the single-step certification is that precarious workers are more likely to get unionized. And those are the ones who need it the most. And so what QP is doing in BC right now is we're organizing a whole crap ton of precarious workers at the aquarium, at universities, at wherever we can find them. We're organizing precarious workers because we know as soon as the NDP government is gone, that legislation is gone, but we can use it now to organize precarious workers and give them the protection that they need. Another example from my work at QP is the Canada Infrastructure Bank. Alberta is the only province in Canada actually to have a public bank. You have the Treasury, the Alberta Treasury, and it was used in the past to support local economic development. It was used to support economic democracy, and it could be used that way again. It could be facilitating that. The Canada Infrastructure Bank, the Liberals promised that it would be a public bank, but when they came in, they made it a private. It's basically P3s, and that's where sometimes something looks kind of the same. They will try to convince us till they're blue in the face that the Canada Infrastructure Bank works the way it is. They'll find revenue generating streams to support the investments. But like, where's the revenue coming from? It's out of our pockets, right? We're paying for more for energy, we're paying more for transit, we're paying more for housing, or we're getting the worst services. And that infrastructure bank, that private money, is borrowing at higher rates of interest than the federal government can borrow at. So if the federal government just did it directly, it would save us money, it would be better, it would address affordability, all of these issues. So we have things that kind of look the same, but when we ask, do these counter and undermine the central logic of austerity and neoliberalism? If they don't, then it doesn't work for us. If they do, if we can make it so that it does, then it will. And so questions to ask are questions like, does it shift power away from those who wield it now? Does it provide material relief to those who need it now? Does it right a historical wrong? Are the decision makers involved in actually implementing it those who already have power, like the banks? Or does the decisions involve the people that we're trying to shift power towards? So when we ask those questions, I think we recognize that we have a cohesive vision already. We have a bottom-up vision if we support workers, if we support communities, if we start there and build up. If we understand that we need to respect the limits of our natural environment, that we need to understand the power dynamics in social relationships, then we have this cohesive vision. And we can package it as a well-being economy. We can package it as a Green New Deal. I think it works either way, but what it is an industrial policy that works for workers. It's an industrial policy that works for people. And I think we know what to do. We just need to get down to doing it. Thank you.
Thank you very much, Angela. That was really inspiring and extremely informative. We do have a few minutes for discussion and questions.
Good morning, Angela. Thanks so much for this conversation. I want to explore the idea of workers as a commodity for a second with you. And all of a sudden, I would argue that the access to that commodity is very limited in this country, almost on a globally, if I was to talk healthcare workers. What I'm not seeing, and you mentioned it, I just need to go back to your comment on but the wages aren't driving. In Alberta, I would argue, because if you look at British Columbia, you do see a government actually taking accountability for the failures of healthcare and trying to drive a wage to drive workers. I would say it's working. I'd just like your thoughts on where you see that going and what is this province going to do about it in your mind?
When I talk to students in the political economy class and we talk about workers as a commodity, we're a very special kind of commodity, but in this current system, we are commodities, right? And I think of the way that provincial governments are underfunding healthcare workers right now as part of this underfund and privatize strategy. Because what they're doing, at least in Ontario, is they're bringing in workers from temp agencies. They're bringing in workers on temporary foreign worker contracts. And we're seeing it on a scale that we haven't seen before. And so their goal there is to break the back of the workers who are unionized. It's to break the union. It's to break that solidarity. The temp agencies are recruiting at the workplace. So as there are long-term care centers, QB long-term care centers in northern Alberta, where as they're leaving, there's a table, and the temp agency is like, we'll pay you double what you're making, no benefits, no long-term security, none of that, but you're also getting the best shifts for like whatever reason. Again, because the goal is not to have a healthy workforce, to have enough workers. The goal is to break the back of the union in doing that.
I'm wondering if you could address this issue. I mean, because we're always being told that the money isn't there to do the kinds of things we want.
Money's fake.
But we're Canadians for Tax Fairness has published reams of stuff showing that in terms of tax havens and tax credits, that we're talking hundreds of billions actually that have been taken out of what governments could receive, quite apart from, the huge cuts in corporate tax. So I wonder if you could address that issue. What money is out there without taking it out of the pockets of the little people, because that's always what we're told is you're going to pay.
Even when we talk about corporate income tax cuts, the mainstream economists will do something that they call incidence, and they say when you increase corporate taxes, it's really the workers who pay. So out of respect to the workers, we should cut corporate income taxes, which is obviously not how it actually plays out, right? But that's the argument that they'll often use. Yeah, first of all, money is 100% fake. We have a sovereign country with a sovereign currency, and we could borrow from the Bank of Canada. We did it during the pandemic. They had this thing called, I can't even remember what it was. They were like, we're not printing money. But they they borrowed from themselves, and they had a technical explanation for it. But we can borrow from the Bank of Canada at a lower interest rates than the private banks are willing to give us. So we don't have to pay 5%. But even if we did, as long as the investments that we're making save us that much money or grow the economy by that much money, we're better off. A private company would make that investment in a heartbeat. If Canada were actually operating as a private company, they would be building houses for people because it makes so much financial sense. So the money is always there. We can always borrow it. If we raised taxes, we would be able to do that. I showed you how much capital gains, increasing the inclusion rate of capital gains to 75% raises $20 billion, like that. And again, we're told, though, they're going to find ways to avoid it. Okay, so we pay workers at CRA more money, and we get them more resources, and we create laws so that they can't. We do international cooperation, like we're sort of trying to do through the OECD. There's a two-pillar process. So there's pillar 1 and pillar 2. The UN has now stepped in because they're finding that process too weak, and they're talking about international cooperation to address tax havens, because tax havens is really a global issue. Governments all over the world are losing money to tax havens. Yeah, we can address this. Beneficial ownership. We did a report about a public pension fund that owns a long-term care facility, and they use a tax haven to launder the money. Sometimes people say, we should just use public pensions to do that. But public pensions operate through the same corporate logic, the same financial logic as everything else. So no, they're often worse in terms of owners, because there's no one person to point at to shame. The money's there if we want to tax. I have it in the book. I lay out how we can change taxes and raise a bunch of money, wealth taxes, corporate taxes, personal taxes, all of that. But also, we don't need to. We can just spend the money. Provinces is maybe a little different, because provinces have some more restrictions and municipalities can't, which is why the CIB being a public bank is so important, because it could be that function for municipalities, because they're not allowed to go into debt.
I love that you dipped into the strategy of keeping workers hungry. I'd like to point out, everybody in this room knows that the majority of public sector and education workers are entering bargaining in 2024. Many workers, I'm going to say, live paycheck to paycheck. As a result, they can't truly consider withdrawal of labor. This perpetuates that cycle of worker abuse. And so my question to you is, how can workers who are already stuck in this abusive relationship with employers actually break the cycle and say, no, we are contributors to a healthy economy. We deserve actual progress, wages, job securities, and COLAs without starving.
One strategy that has been particularly useful for unions across Canada is cooperating. What we saw in BC was all of the public sector unions came together. Even though it was a friendly NDP government, they were being offered increases that were well below inflation. So the 5 unions got together and worked strategically. In Quebec, the public sector unions, they just had a general strike. I don't know if people know this. They've had huge turnouts at demos. They are talking about another general strike. So again, negotiating in public, putting forward our economic vision, working together. QB locals did the same thing in New Brunswick. Just at the beginning of the pandemic, I think, they were very successful. Again, these are like a lot of QB examples. I'm sure there's other ones. But the education workers in Ontario, they were building their bargaining demands. They used Jane McAlevy's model of deep organizing. And so they had conversations with the teachers. They had conversations with parents. They had conversations with the community. They built their demands that way. They had open bargaining. They let everybody know how bargaining was going. And so Doug Ford was forced into this position where he knew they were so strong, he was going to have to use the notwithstanding clause in the Constitution. But that was a clear overstep. And because these workers had built such support and such political momentum, it really forced the situation where building trades unions who had supported Doug Ford's election just like recently before that were like, no. And they all got on stage together. They all backed this largely feminine, racialized, low-wage workforce who had done the work. They stood there and said, no. So you build relationships, you build solidarity, and you create those moments of pressure that force them to back down. Unfortunately, Danielle, like Doug Ford will back down when he's wrong, when it's overwhelming pressure. That's one advantage to Doug Ford. He keeps being corrupt and sneaky, like, all over the place. But Danielle doesn't, I don't know if she'd back down. So yeah, it has to be like a lot of pressure, I think, for this particular government in Alberta. But those are the strategies I think that you use.
I just wanted to, I guess, come full circle back to the title of your talk, Building the Economy We Want. And I love so much of it, but one thing I'm really going to take away is the questions that you gave us that we can ask when decisions are being made or when opportunities are on the table. So does it shift power away from those who have too much of it? Does it provide material relief for those who need it now? Does it right historical wrongs? And does it involve the people affected? So thank you so much for that. That's just, and when we take all that together, we have a vision. So that's wonderful. And please join me in thanking Angella MacEwen.